Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I'm Suyash Maheshwari and with me is Amit Ranjan. And it's a Wednesday morning and the Indian markets, they have opened in the green after two sessions of lull. I mean, the reason of this is, of course, the retail inflation print that came out both in India and US yesterday post-market hours. Headline inflation in both countries was in line with what the market was expecting, and that shows that, the macro situation in both countries is rather stabilizing, and that perhaps further makes a case for an earlier rate cut, although at this point, I mean, no one is really expecting a rate cut from the US Fed this month, that is in the March policy meet. But, the optimistic ones amongst us, they see it happening, by May or June of this year. Also, Amit, a very strong handover from the US markets as well as the Asian markets this morning.
Yeah, as far as the Fed is concerned, it seems the data has reinforced their caution towards an immediate or early rate cut. And like you said, May and June may be the earliest it may happen. The consumer price index, which is a broad measure of goods and services, increased 0.4% for the month and 3.4% from a year ago. The core CPI, which excludes food and energy, increased 0.4% and 3.8%, exactly what had been predicted even when we were talking about it a few days ago on our show. A 2.3% increase in energy costs has helped boost basically headline inflation numbers. Food costs were flat for the month, while shelter climbed around 0.4%. When we look at the markets, they have reacted positively. Yesterday, everybody in the West was in the green. Dow Jones closed in the positive at 0.61%, S&P at 1.12%, Nasdaq at 1.54%. Oracle was one of the biggest gainers. Coming to the European markets, Stock 600 closed at in the positive at 1%. Hang Seng continues to be in the green at 0.25% this morning. Nikkei still in a correction mode, slightly in the negative this morning at minus 0.38%.
All right, that's the global handover. But, the markets, in fact, in India, they opened in the green. They were up about 0.5%. But, the pressure has kicked in once again. And Nifty has fallen, in fact, back below the 22,400 mark. In fact, they are very close to the day's low, pretty much trading on a flattish note this morning. Nifty 50 is up currently 0.03% at 22,342. Sensex is also up about 0.1%. The broader markets, I mean, they were showing some bit of pullback this morning, but again the selling pressure has kicked in and the mid cap index has fallen almost 0.7% this morning, and the small cap index has also taken a hit of 0.7%. Volatility, although it has risen on a day-to-day basis, but at 13.79, I think it's still within the comfort zone. But let's also bring on board Akshay Bhagwat to get his views on the markets, because they are choppy and there is quite a bit of uncertainty. Akshay, thank you for joining us here on News9. Always a pleasure speaking with you. What's your sense of the market? Because incrementally we are moving higher. Nifty is at record levels, but I was noticing a couple of interesting things. More stocks are now in the lower circuit, historically speaking, and the advanced decline ratio, that's also heavily favoring the bears at this point. What does this tell us about the overall sentiment of the market?
Good morning, Suyash. Well, see, if you look at the broader sentiment of the market, you're absolutely right. Last 7-8 days, Nifty has been consolidating or oscillating around the 22,300 range. But if you look at the broader markets, yesterday, the small caps, the mid cap space, there was good selling actually seen in all these counters. And this was on the backdrop of even SEBI raising red flags about the mid cap and the small cap space. So there is some bit of pressure in the market. Yes, I completely agree with you. But if you were to see Nifty index as such, the issue is that some or the other stock from the Nifty index is saving the day for the Nifty. So today it is ITC. If you see yesterday, Infosys and HDFC Bank. So, Nifty continues to trade in the range, but stock wise, there is some pressure which I see. Levels for Nifty to keep a watch on, key crucial support would be 22,200 and the resistance would be 22,500. Still, as far as the broader trend goes, goes for the Nifty index, yes, the trend has not changed. It is still positive. If 22,200 breaks, then that would be the first sign of caution for the index. Otherwise, till now, I don't see any reason to worry. But yes, if you have exposure to the small and the mid cap space, you need to be a bit worried. You need to have your stop losses in place or your risk management trades in place, because there is where the pain will be felt, even going ahead, as I understand, going by the broader setup.
All right, nothing too concerning for the headliners, but the broader markets, be cautious there, be aware of where your stop losses are, and make sure your investments are well insulated. But I also wanted to get your view on Nifty Bank, because that has been rather more volatile of the two. It moved in that range of about 900 points yesterday, formed that big spinning top sort of a candlestick pattern. I mean, it seemed like it was HDFC Bank versus everybody else. HDFC Bank had a very good session. Everything else, especially the PSU names, they were falling.
Absolutely. Bank Nifty, a spinning top, clearly an indecisive candle and high volatility in terms of price action was how the day summed up yesterday. Today being the weekly expiry for the bank index, 47,000 here would hold special relevance if you are a day trader. Now, if you look at the derivative placement in the option segment, especially since it's a weekly expiry day, a lot of put writing bets are concentrated at the 47,000 strike. So if you're looking out for support for day trading, yes, 47,000 is an important number you have to note. On the upside, a lot of call writing. If you look at the broader option matrix, there is a significant presence in calls, and majority of them are on the writing side. That is evident by the OI PCR readings, which is almost around 0.7. So call writers are kind of slowly piling up at strikes of 47,500, 47,800, and the majority is at 48,000. So yes, Bank Nifty will have a slight pressure in case it tries to make an up move, but the broader setup is still 47,000 holds. Still, there is a chance that some or the other bank will save the day, like it happened for HDFC Bank yesterday. So yes, hold your longs in Bank Nifty, keep strict stop losses below 47,000. Today's weekly expiry, chances are that it might be choppy, but 47,000 would hold for the day.
All right, and speaking of savior for Nifty Bank, I mean, clearly it looks like it's HDFC Bank, at least in the last few sessions. Yesterday, the stock was up over 2%, this morning up 0.5%. And as I also mentioned, it was the only driver, and to some extent ICICI Bank as well, that was, keeping Nifty Bank afloat. But we are expecting this this FTSE rejig that will bring huge inflows for the stock. That's on March 15th. What's your assessment of HDFC Bank? I mean, are there any signs that suggest that perhaps you have seen or at least the worst is behind us for now?
Well, honestly, one thing is evident on the charts is that 1400 is emerging to be a support or a demand area for HDFC Bank. Now, it's been almost, you can say, over a month where momentum has not regained, but 1400 has been held on. For the momentum to pick up, or if we were to talk about any trend reversals for HDFC Bank, it is mighty important that HDFC Bank crosses above 1480. So this level you should have on your mind. Till then, it's still in a range. It's nearing the upper end of the range. So it's again a word of caution as it nears the upper end of the range. The trend reversal or the momentum regain or a positive positional outlook will be seen in HDFC Bank only if we overcome and sustain above 1480. As it stands right now, it's in a range 1400, 1480, nearing the upper end of the range. So a word of caution if you are building a trading long position at 1480. So still, as I see the broader charts, it is still in a range. There is no reason for me to believe still that there is going to be a major upside in HDFC Bank. It is just holding the day and acting as a savior for the indices. That's what the chart reading has to say.
Good morning, Akshay. Now, the tire industry has not been doing too well of late, and yesterday Balkrishna Industries, there was an income tax raid on their premises. Now, despite that, when I looked at the stocks and the performances in the last 1 week, Balkrishna Industries is the only stock that is in the positive, slightly down today. What explains that according to you, and is it a time to get into the tire industry stocks specifically right now, considering that they are hitting such lows at the moment?
Good morning, Amit. For Balkrishna Industries, yes, the stock is in a slight negative zone for day trading, but yesterday it did note a strong upside move on day trading front. It was primarily on some short unwinding as I look at the derivatives, futures and options space. But the broader chart setup still is not exciting. There is no reason on the charts which signals that there can be some major upside ticking into this particular stock. So I just think this is more of a dead cat bounce in the normal proceedings of the market. At the best, you can see levels of 2400, but clearly I do not see any trade building up in this. The way the charts are, 2250, 2400 is the range. We are somewhere in the midway of this range, and clearly it's in a no trading zone. If you're holding this share, still the broader charts too are suggestive of a range bound action in Balkrishna Industries. So really, if you're an investor, your stop losses should be below 2200, but I don't see any major momentum pickup or some action brewing in this stock as far as the short to medium term is concerned. As far as Apollo Tyres, since we're talking about the tire industries, a similar chart structure currently trading at a vital pivotal point. To 500 is an important support zone. If this breaks, so you might see some bit of sell-off in this stock. So really in the tire space, still I'm not very keen on going aggressively long. Most of the components in the tire industries are either range bound or have a slightly negative texture, the way the chart placement suggests.
Yeah, Apollo not too far from its 52-week high also. But what are your picks for our investors today, Akshay?
Yes. So I have a couple of trading picks. It's a very choppy market, and you need to be very flexible and understanding the way the market is behaving right now. The couple of stocks which I like here, one is Kotak Bank from the private banking space. 1680, 1700 time and again is acting as a good support for this bank. And out of the entire private banking space, this is one name which has not performed as yet in the last couple of years in terms of its price move. So I think this is a good trade from a risk reward payoff. Buy at the current rates. You will see targets of around 1767 to 1781. That's from a short-term trading perspective. Keep a stop of 1697 on this buy trade. And the second trade here is from the IT space, since IT is in the limelight, although a bit choppy, but the demand is slowly building up at a base. So Wipro is one stock which I like from the IT space. Near its support, so a good risk reward payoff, and any recovery you can see targets of 527 to around 534 in Wipro from the short term perspective. Stop loss will be 497 on this buy trade.
All right, Wipro and Kotak Mahindra Bank, those can be on your radar for the short term. Akshay, always a pleasure speaking with you. Thank you for joining us here on News9. But with that, let's slip into a short break. On the other side, Amit Gupta of Fintech Capital joins us.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff. more and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rumors should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Tick here on News9, and the markets actually, after the opening in the green, we have succumbed to profit taking. Nifty, as we speak, has turned negative for the day. In fact, it's very close to its day's low, has broken below the 22,300 mark as well, down about 0.15% this morning, hovering just around the 22,300 mark and falling. Sensex is also trading in the red. It's down marginally by 0.03%. The broader markets, the situation is getting more and more concerning as we speak. Almost, I was reading this report which suggested that 80% of the small cap stocks have, participated in this correction that has played down over the last 2-3 weeks. So, be cautious of that. The mid cap space, although it was, relatively insulated from this correction, but, the last couple of sessions, the cracks are getting wider over there as well. Volatility at below 14, although it's rising, it's in a reasonable zone. But before we welcome our guests, I just want to point out two things. The overall breadth of the market, that is heavily in the favor of the bears. One stock is rising for every 10 stocks that are falling, and that is massive. That just shows us, even though the markets are currently on a flattish note, the stronghold is with the bears. Also, more and more stocks are now finding themselves very close to their 52-week lows and in the lower circuit. Yesterday about 145 stocks were in the lower circuit. This morning, as of 10 a.m., 240 stocks in the Nifty universe are at the lower circuit. That speaks a lot of about the the kind of sentiment that we are seeing in the market. Investors are cautious. They are concerned about this cracks and the crackdown that we are seeing in the broader markets. But with that, let's also bring on board Mr. Amit Gupta of Fintre Capital to get his views on the markets. And sir, I want to begin by asking about this tweet that you put out a couple of days back, which indicated that regulatory actions we have seen over the past few months from RBI and SEBI, that has helped bring down leverage in the system. And according to you, that could probably give good opportunity for investors to invest in good stocks at decent valuations. So just to clarify, are you expecting a big fall before the eventual resurgence? And if so, what sectors will fall the least and perhaps gain the most in this shakeout?
Yeah, hi Suyash, good morning. Thank you for having me. So yes, the financial market regulators, whether it is RBI or SEBI, they have been repeatedly cautioning investors and intermediaries in the past few months. However, regulators' cautions were mostly unheeded because both investors and intermediaries were continuing to ignore fundamentals. There were more of a momentum and leverage trades which were happening, especially in the IPO and the SME space. And a lot of regulatory and financial limits were getting exceeded. So consequently, the regulators have started to take action, especially in the last 1 month. I expect that to reduce the leverage in the system, they'll continue to take precautions and take steps, and that would sort of create a waterfall kind of a fall in the markets, and we may be able to get stocks at much better valuations than what they were till last week. So it's always difficult to point a percentage of fall when it can happen, but since we are a bottom up investors, we are actually looking at stock specific opportunities. If they come into our comfortable buying valuation zones, we are happy to take the action. But as of now, we are on the sidelines for the past 10 days or so.
All right, and as you rightly pointed out, sir, there are problems that are brewing in the SME segment, and SEBI particularly suspicious of market manipulation. I mean, the stocks over there are plummeting. Yesterday they crashed by 16 to 20%, the constituent stocks in the BSE SME IPO index. The index on the whole was down 5% or so. This morning it's down 1.5% and falling. For those investors that are heavily invested in this segment, how can they screen their portfolio for market manipulation?
So, see, in the SME segment, the disclosures are very less. So sometimes it's very difficult to know just by reading the balance sheet, how much of a issue is there or how much you can trust the numbers. So you can always, scuttlebutt and, try and find out what are the ground realities, how much orders they are actually getting, how much margins they are actually making. But since at the regulatory level itself, the disclosures are not much, the only thing which you can do is a little bit of scuttlebutt research to understand a company. In my experience of 2 decades, almost I would say 90% of the companies you will filter out with very simple screeners to weed out these kind of stocks. Usually the 10% which remains eventually move to the main board. And that is a good indication to actually invest in these kind of SME stocks at the right time and at the right valuations. But the kind of euphoria which we have seen in the past 6 months or so in this space, it was actually quite surprising to me that SEBI took that long time to actually get down heavily on the SME stocks, even though it's just a verbal job owning at this point of time. But I believe there will be much more stricter IPO norms coming for SME stocks in the future.
All right, and even though as we speak the markets, they are in a correctionary phase right now, but one sector particularly stands out, and that is the FMCG pack. It's up this morning, up around 1.5%, whereas every other sector is now in the red. The sector clearly has been under pressure for the longest of time, and I think the inflation situation with in India stabilizing, I think that bodes well for some of these FMCG stocks, for their margins also, puts more discretionary income in their hands. Amit, I'll come to you first. Amit Ranjan.
Yeah, thank you, Suyash. The inflation food inflation numbers, which account for nearly half of the consumer price basket and therefore FMCGs, came up at 8.6% yesterday, slightly higher than 8.3% in January, which is just right for the market, and therefore the positive reaction. The downside is that the persistence of the El Nino conditions and therefore an expected weak rainfall and a scattered sort of rainfall, and that would impact the crop. And why I say that? Because rural consumption in the FMCG sector accounts for 60% of the revenues of FMCGs, and that has been floundering. If we look at the stocks, Hindustan Levers has been the worst affected according to this, and because of this, the average household purchases have also gone down. Whether you look at cooking oil, that has been down, washing powder is down, Basmati rice is down, salt is down, therefore Tata Consumers. So most of these stocks, if you see Hindustan Levers, ITC, last 1 week returns, or even Hindustan Levers, even the last 6 months returns are in the negative. But most of the other stocks, Tata Consumers, they are all in the negative as far as the last 1 week and 1 month returns are concerned. Sir, do you see a turnaround in this sector despite what we are expecting with the rainfall and the El Nino conditions that are persisting?
I think the El Nino conditions will weaken in the next 3 months. That's what the meteorologists' predictions have been. But, our ground research, talking to people, in the villages and those who actually grow crop, the Rabi crop is not that much impacted. Having said that, I think the volume growth in the FMCG companies will be a little difficult to come by. HUL has also already said that they are expecting about 2% growth in the company. So even though one can say that the worst is probably priced in, or the worst is probably done with, and with the El Nino conditions sort of receding in the next 3 months, we should have a better rainfall, and hopefully by the monsoon there will be better crop, and rural conditions can improve from there on.
So, looking at the stocks, do you see the companies which are less on the whose product mix is less towards the food side, like maybe like P&G and Colgate Palmolive? Those are the stocks that will perform better as they are even in the times to come.
No, it's a little difficult. I mean, Colgate is also a rural product. People there have also shifted towards towards the actual toothpaste rather than just doing it with the other means. So the volume growth across FMCG pack, whether it is Colgate, HUL, even I would say premium products like Britannia, etc., they're facing a lot of issues in the volume growth. And if for any reason the cost of the raw materials go up because of any inflationary pressure, then that volume growth will also sort of decline, even further. It could be even negative volume growth. So I'm not too keen at this point of time on these stocks and on these companies. I believe there will be better opportunities once we get closer toward the monsoon season and RBI rate cuts timing.
All right, and I mean, stocks like HUL, even though they have not given returns to investors, they are pretty much holding the fort. They protect the capital. I mean, and this is specifically relevant in a time when we are seeing big cracks in the market appear in the broader market, especially. So I mean, just an observation, not a recommendation, of course. But there are two big events lined up for Friday, Amit. We'll have MF stress test result, and also the electoral bond details will be put out by the Election Commission. I mean, what will you be eyeing in those reports, and how will it be relevant for investors, and what should they be looking out for?
See, as far as the mutual funds stress results are, concerned, the stress test report, so that will, give out our estimate, how much is the volatility in the small cap indexes, small cap, not just small cap, even the large cap and the mid caps. So you'll have a better understanding, of how much time will it take for portfolios to get liquidated. Because you don't want a case where there is a mass redemption and then mutual funds are not able to do it in a particular period of time. So I think parameters like investor concentration, portfolio turnovers, these kind of things will come out. I don't see it to be a too big a deal, because this notice has come from last 1 month or so. MFI came out with a notice sometime last week in February. So a lot of selling would have already happened because of that, wherever the stress test was required. And especially in the small cap space, we have seen the index is down about 10-11%. And I don't see too many surprises on that front. Instead, this will actually make the markets better because illiquid stocks will be sort of reduced in leverage and reduced in concentration within the mutual fund portfolio. So I think that should not be a major concern unless we get a real surprise. As far as this election bond is concerned, your guess is as good as my guess. The results are already submitted. The number of donors and the name of donors may also come up by Friday 15th by 5 p.m. And we have to see what names comes up and into that because all these are anonymous political parties donations which are done by purchasing the electoral bonds from the SBI. So we have to see, which names comes up, and then only we can react to it. We cannot really plan for this event.
All right, those are the words coming in from Mr. Amit Gupta. Sir, great insights from you as always. Appreciate your time and your thoughts. Thank you for joining us here on News9.
Thank you, Suresh, for having me.
But before wrapping things up, let's look at the markets because they are very close to their day's low. Nifty, as we speak, has broken below the 22,300 mark, just about 10-12 points away from its from its intraday low, and the Sensex is also falling. It's down 0.02%. The broader markets, the correction is getting worse and worse by the minute. Both indices are down 2 to 3%. The small cap index is very close to the day's low, and remember yesterday the small cap index had turned negative for 2024 and it's extending those losses. A lot of these stocks, 80% of them are participating in this correction, so be cautious out there. And the mid cap space, they were relatively insulated so far, but since yesterday we are seeing the cracks getting deeper and wider over there as well. The index is down 2.2% as we speak. Both indices, they are looking like the correction is here to stay. India VIX is below 14 still, but it is on the rise, and since the markets are so choppy, and also remember we have the weekly expiry of Nifty Bank F&O contracts, so the volatility is expected to spike as the session goes by. But with that, it's a wrap on this edition of First Take. Thank you for watching.